What's up, traders? Hope you're having a good week and enjoying this recent crypto rally. A friend of mine who wanted to get into trading asked me a question this week. Where do I set my stop loss when I'm trading cryptocurrency? What a great question. I'm sure that's the question that every beginning trader wants to know. And the purpose of my channel here is to teach the methods that I use that I've had to discover over the years that actually work. And to demonstrate this, where to set stop losses, I'm going to use two live trade examples that I posted on TradingView and on my Discord live, not just to show you, hey, look, if you would have done this, it would have done that. No, this is what I use on a regular basis. And it took me a long time to figure it out. Hopefully, I can shortcut the process for you. So the two examples we're going to look at are Solana USD, a trade before this rally actually happened, and then Ethereum, which was a short trade when it reached the top of this recent rally. Both really cool examples that have played out very nicely. So let's look at Solana. So this was something I posted on TradingView a few weeks ago. Following the Russian invasion of Ukraine, February the 24th, pretty much every single speculative asset, cryptocurrency included, spiked down on this news. And it spiked to a prior high that is set back in August and also matching up with the January the 24th low, which again, every risk asset, including the stock market, was respecting. So let's draw that level up here on our chart and let's go back to that date in time. Now, there may be something that slightly more seasoned traders notice about this setup right here. Some people would call this a double bottom. And that really begins the process of finding a trade. What is a double bottom? A double bottom is a classic chart pattern where you have price get to a level, come off of it, test it again, and then that is a sign of a potential reverse. There's also a double top, which would be in reverse. It would hit the top, come down, hit the top again, and go down, reverse. Ideally, what we're looking at is for price to reverse off of a level. And this was, of course, a level of inflection that it set back in August of 2021 during the middle of the 2021 rally. And so it matches up very nicely. And then what we had on that February the 24th was a spike to pierce that level. But that candlestick, you notice, comes back up inside the double bottom pattern. And that's your signal. So the key question when we're trying to determine where stop needs to be is, where is this trade wrong? We're operating under the premise that price should reverse off this double bottom. So if it breaks those two lows, that means the trade is over. So if price gets down below those lows, that's where our stop needs to be. Now, of course, I know a lot of people, especially when they start trading, they put their stops in a place, price goes, and the market makers take your money, and then it goes the other way. Yes, that happens. Yes, it sucks. No, the market doesn't hate you. You are the market. There's a good chance that a lot of other people had orders down there too. So don't feel like you're special that they took just your money. Learn from it. Wait for these kind of key setups and your probability automatically increases. Let everyone else get stopped out. Let the people that bought when price came down to here and had their stop losses really close, let them take out their stops. All right. Once you get that set up, now you know where the market doesn't want to go. So, what we can do is we can set up a long position with a stop loss right below that February the 24th low. We're going to give ourselves at least a 3-to-1. I liked this level 141 here, mainly because it was also the 50% retracement of the leg up. So 141 was a really good level for a profit target on this rally should it happen. Of course, anything can happen. We don't know the future. Well, as it played out, we had a good initial pop, but then price actually came down to test this level again. Remember, our stop is below this low. As long as it doesn't break these two lows, we stay in the trade. And we were fortunate enough that it did not take out our stop, and up it went to the resistance. And that is where we're able to find a setup in the other direction. So that is an example of where we're able to look for a double bottom, find that second low that it makes, set your stop loss below it, find the next resistance as your target, and now you have your trade set up. And you can very easily size your risk according to your entry versus that stop to really make it work for you so that you don't take outsized risk. You don't YOLO long. You can fit a certain amount of loss into that movement of price with a little bit of math, but that's a subject for another video. All right. So that is a long example. Let's use some more live examples and look at Ethereum recently. So Ethereum, let's start this over. So here is Ethereum for the last year or so. But what really comes into play is the November high down to the January 24th low. Okay. So this full well, in this case, 3-month downtrend, or 6-month as we come to now, had a 50% retracement level right at 3,500. That was key. A key level that I've been watching as this rally has been developing. And here's a little interesting note. Ethereum hit its level of 3,500 at the same time that Bitcoin reversed, Solana reversed, everything seemed to reverse at the point that Ethereum reversed. Just going to throw that out there, but it seems to me that Ethereum is starting to have a lot of dominance in the crypto space. Just throwing that out there. Be interesting to watch because Bitcoin has, of course, been the dominant player for the whole time. So let's go back to this point where it was approaching the level there. And we're going to go down to a lower time frame, use the 2-hour to really see what the price action did as it was approaching. And like I said, I made sure to post this on TradingView to point this out to people because a lot of people are, of course, trading this rally. I had a lot of people hit me up last weekend FOMOing. They were just straight FOMOing, asking me, "Oh, do I need to buy this rally?" Because it had been so sleepy for a long time. But ironically, that's market psychology for you. It was probably the worst time that they could jump in. So what basically happened when people were trying to FOMO into this rally that was pretty mature is price got up to that 35 level. You have two holds of that level. Now, if you're really tight and going down to a 5-minute, well, you probably could have seen a double top there. And I wouldn't be mad at you if you took a trade based on that. But watch what happened here on the 2-hour. You didn't really get much of a down move there, but then you did have this final really volatile spike that happened on April the 3rd, which was what I posted about. And that was really the key. That was the response to the resistance level I was looking for because this lets me set up my trade. This lets me set up my trade. I want to short that level, so I'm going to short it. I'm going to put my stop just above that last high. You can call this a stop run. You can call this a liquidation. I've had that get me a lot, as I'm sure that you have if you've been trading for a while. And that's why I key off them. Because if I got stopped out on this in the years past, very often this would be a great signal for me to get into a reverse to make that money back. And sure enough, it never breached that stop. And as we sit here making this, Ethereum is holding that resistance level of 3,500. So that is what I wanted to illustrate for my friend and you all to teach. Look for these volatile spikes and have them match up with support and resistance levels or classical chart patterns. And ask the key question, when is this trade wrong? That will let you put your stop where it needs to be and size your risk accordingly. If you want to catch these, make sure that you follow on TradingView. Also, go down below, join the Discord. It's free. I don't charge for it. That's because I just want to create a community of traders. So, as always, trade wisely, and we'll see you in the next video.